and thank you all for coming today. So I'm going to take a few moments of your time today and walk you through MAG. MAG is a silver company, and one that I hope at the end of this presentation shows you that we're a rather profitable and robust company. So let's move forward. So I'm going to be making some forward-looking statements today. But one of the things that MAG has been successful at is making forward-looking statements turn into fact as we move along our process from discovery to development and ultimately production. So this is our decline. It's an underground tunnel leading to the deposit. I don't know how many of you have seen one before, but this looks more like a Swiss tunnel to me than anything. The reason we show this is quite simple. It shows the commitment to the project, because you don't invest this kind of money in a project unless it's going to be a long-term mine and it's going to give you significant returns in the long run. Second of all, it shows you the quality of the workmanship, the quality of the partner that we are working with is Fresnillo, which is the largest primary silver producer in the world today. And the third thing that it talks about, or talks to, is the cost. If you were to look at a decline like this that doesn't even have this fancy 25 centimeter concrete base, you're looking at the cost in maybe Ontario, Nevada, Quebec, something like that, at about $4,000 per meter. Fresnillo was doing it for us at a cost of about $1,500 a meter. So it just puts everything into perspective. The commitment, the long term, and the cost effectiveness of working with such a fantastic partner. So let's talk about MAG. MAG started in 2000, and what we wanted to pursue was high grade and a high IRR, because we want to make money. And when we started the company, silver was trading at $5. So we wanted to ensure that if that ever came back to that region of $5, $10, we would still be producing a decent cash flow for our shareholders. And of course, you need district scale. District scale, of course, lends itself to what I just talked about, which is length of mine. So you want to put in that CapEx, but you want to return for a long period of time. Now, when you're looking for silver, you want to go to Mexico, and when you're in Mexico looking for silver, lead and zinc comes along. So that's why we have it up there. So our lead asset, our main asset, is the Juanicipio asset. It's 44% to our account and 56% to MAG's account. We initially had 100%, but we did an earn-in in 2005 for about $5 million, and this is the current agreement that we have in our JV of 56-44%. As I mentioned earlier, Fresnillo is pretty much the best operator that could be developing this asset. They've been working in this region, and I'll show it to you in a few slides, for over 130 years. And they're very knowledgeable about these types of veins. They've developed 2 projects recently in the last 8 years, on time and on budget. And so they continue to do the same for us. And as I mentioned earlier, at very, very reasonable cost structure. The asset now is growing beyond the 200 million ounces of silver alone that we have, which actually places it at the 5th largest primary silver asset out there on the planet or in the world, however you want to say that. It has an average grade of 600 grams per ton, and I'm going to show you a slide which puts it into perspective relative to other silver companies out there. And of course, when you have these kinds of asset, or this kind of asset with these kinds of numbers, you come into an all-in cash cost of $661. So if, of course, silver's trading at about $18 now, you have a very healthy margin at any time out there. We have another asset, which is called the Cinco de Mayo. We're working to regain surface access on that. So right now it doesn't provide any value to our NAV, so we don't talk about it. When we get back on the property and we have something concrete to talk about, we'll then talk about it to our investors. So from financial position, as mentioned in the first, in an earlier presentation by Claude, we are a very strong financial position, and we have $134 million in the bank with no debt. So this just gives you an idea of how it's broken down. So the CapEx for our project, 100%, is $300 million. So to our account, 44% is 132. We've spent 20, as you can see here. So that leaves us about 112 to spend. We've got 134 in the bank. So we have a safeguard on top of everything, or in difference, the delta of $22 million. So one of the main things about MAG, right from the get-go, is our history of discovery. We have 7 discoveries in the last 13 years, and we've just found another one recently, so it'll soon be changing to 8. Now, as I mentioned earlier, if you're looking for silver in the world, Mexico is the first place that you want to go, or the #1 place you want to go. If you're looking for silver in Mexico, you want to go to the Fresnillo Silver District. There are 15 1 billion plus ounce, silver ounce assets in the world today. 8 of them are in Mexico, and 4 of them are in this region here, the Fresnillo Silver Trend. It has produced over 4.5 billion ounces of silver historically, which comes out to 10% of the world's silver. So any silver that you've ever seen, 10% of it has come from this region alone in the world. So let's zoom in from where we were. So as you can see, the tenements here, this is the Fresnillo tenements, and this is the JV here. So we're going to zoom into that upper right-hand corner because it shows us where we are. Here, this swarming of veins, the red represents veins, they started mining in 1552, so over 500 years ago. Fresnillo has been operating in this area here for approximately 130 years. And this is only 6 kilometers from here to here. So it's a very small, tight area. As you can see, there's at least 3 head frames, or 3 mines in this area. They have the old Santa Nina here, so it's a very concentrated area. When we first put in our first drill hole right here on the Juanicipio vein back in 2003, we hit mineralization on the first hole, so hole 001. That is highly irregular for the mining industry. 16 holes later, we hit the Valdecañas vein. The Valdecañas vein is a vein that holds 90% of the value of our company currently. Prior to that, Fresnillo had this property, and if you can imagine, erase all these red veins there prior to us getting our property and prior to us drilling. Once they understood our geological thesis that we had basically proven from discovering these 2 veins on our property, they came back to this area where they had previously drilled and found nothing, and found an additional 650 million ounces. So in the last 10 years, they've just found 1 billion ounces of silver right in this area alone. So it's quite a significant area, and it continues to grow, and that's the other part I'm going to talk about today. The first part is I'm going to tell you about how valuable and robust our project is presently, and then going forward I'm going to talk about how that even this region, after finding that kind of mineralization, it's going to continue over and above that. So one of the other things that happens when you discover early on in your mining process, or even in your exploration process, is if you find something, you just drill it out. You need to know how big it is. You need to know the value of it. You want to present that value to the shareholders. So you don't drill anywhere else. This goes 16 kilometers down that way. It goes 7 kilometers out that way. And we're just working in this small little area. The blue represents the JV, and what this green area represents, it's superimposed on top of the blue, which is within the same region, but it just means we own the surface rights, which means we have access to our property anytime. We own the mineral rights for 50 years with another first option by another 50 years, or to own it for another 50 years, but it's the surface area that is very important to own so that you can access and work on their property without any issue going forward. So let's look at some numbers just for some of the numbers people in the room. Of course, our asset mentioned earlier, and I have a slide that's going to show it representative to other silver companies. But it's an asset that is over 600 grams per ton average. It has almost 2 grams gold running through it, and then it has 5.5% lead zinc on top of that. So it's a very, very robust and significant asset from a geological perspective. Now, I have compared the Juanicipio projected UPEA here, which is an updated preliminary economic assessment, which in very simple terms is just a technical report that tells you all the engineering studies and the costings relative to that. And then the actual of the Saucito 2 mine here, that was just across the border if you saw. So the yellow is color-coded, nice yellow here and nice blue there, just so you could see what we're doing. And then we compare the two. So this is actual on this side, and this is what projected. So as I mentioned earlier, CapEx is $132 million. We have 134, and of course, you know that differential of $20 million. The other thing is, of course, the mine life is over 15 years now, so it's a nice long-term mine life. And the UPA is talking about 2,650 tons per day. That's the throughput that goes through and generates cash flow ultimately. If you compare that to the Saucito over here, same size mill at 3,000 and 2,650, but you have also a 22-year mine life, but you'll find out later in the presentation that ours continues to grow. But one of the very interesting things is the way Fresnillo builds and operates. What they do, if they have a huge mine, they build the mills in modules of 3,000 tons a day. That's what they're building us. Now they've been working in this area here for the last 4.5 years, and they've been operating a mill of 3,000 tons a day. But because they're such good operators, they have raised that or optimized the throughput of that mine, or that mill, excuse me, to 4,000 tons a day. And so that's what they're going to be building for us. They're going to be building a 4,000 ton a day operating mill for the price of 3,000 tons a day. So this is one of the latest developments, going from 2,650 to 4,000 tons a day. That's a 50% increase in metal throughput for the same price of the mill that we originally had to deal with, or that we will have to deal with from a cost perspective. The other thing is, this is a very conservative UPEA. As you can see, our on-site operating cost is 67 a ton. That's a projected value. If you look over here, the actual right across that borderline on a mine that's been on a mill and mine that's been operating for over 4 years, it's 40 a ton. I'm not saying ours is going to come in at 40, but you could probably say maybe 50, maybe 55 in that region, something like that. So this gives you an idea of comparing the different silver assets out there from grade, because grade is king. What you're looking for in mining is looking for one of the best assets out there. And as you can see, it's very demonstrative of comparing it to the other silver companies out there. But one of the key things that I mentioned also is size. You can't just have grade, because otherwise, in investing that capex, a large capex for a short mine life doesn't give you a long enough return. Ours is the 5th largest asset in the world, primary silver asset in the world as well. So this just gives you a few more numbers. Let's take worst case scenario. Let's say silver goes down to $10 an ounce. At $10 an ounce, our company is still generating an after-tax IRR of 15%. So minimal downside in worst case scenarios, and depending on where you think silver is going to go, you can just see the return from that perspective. The other thing that's very interesting too is our after-tax cash flows. On an annual basis, based on the 2650, you're looking at $75 million per year. If you go up to the 4,000 tons a day, which we're doing, you're looking at an after-tax cash flow of over $100 million per year. So our capex to get in is 132, and your payback's just over a year. So a very robust project. So where are we? We started in 2014. We're down the decline, our fancy decline, 3,500 meters. We're at the top of the vein system now, and we're just starting our big spend, mill procurement and construction, and we're going to be in production in H1 2019. This just gives you an idea of what we're going to be doing, and going forward, we're at the top of the vein. This is what the vein looks like, and we're going to be going down from there. So from a financial point, or from a risk perspective, which there are many risks in mining, you can see we're very much a box ticker. But one of the main things that we've always talked about at MAG is the fact that we've always thought, even though this is a robust project and we have got this great asset and it's big and it's wonderful, we always thought there was more. Let's get to that. First, I'm just going to play a video here, and it gives you some perspective of how things went. So we're in that upper right-hand corner, and the vein is comprised of a west vein or the Valdecanas vein is a west vein and an east vein. And this is the Bonanza zone. This is what's going into production. This is what's been financed. We did some additional drilling and we started to call it the deep zone. But then we wanted to close it off because we wanted to identify the parameters of the asset before we did our engineering studies. So we sank 4 holes 100 meters below the last known mineralization, and we thought there was going to be nothing there. Just absolutely nothing. And we wanted to do that so that we could just get to work. What ultimately happened is this area in where you saw earlier, P1. See up here, the size of this asset, the Bonanza zone, is about 1.2 kilometers in length. It's about 400 meters high, and it's about 6 meters wide in width, which is great for mechanization. You can get machinery in there and everything. What happened on those 4 drill holes where we thought nothing was going to happen, we had an average of 22 meters of mineralization going from the first hole of 11 meters wide, true width and thickness mineralization, to 32 meters wide. That was, of course, news to us and a pretty significant situation where we thought there was going to be no added value, and there turned out to be significant value. So we continued drilling, and we drilled and we drilled, and what happened is we found more and more mineralization, and we found what we now call the dilatant zone, or a fat zone, where you see that wide mineralization. We continued to drill, and this is going to spin in a second on a third area, because it just continued to grow down this way and that way, and we just didn't know how much. So what we're doing now is we're pursuing tonnage. We want to see how big this project can actually get. So we continue to drill, and the other thing that you should notice is that this is angled. This asset is angled, and as on a 55-degree angle, so as it goes deeper, it becomes more valuable, or goes deeper into the JV property, not back into the property for Fresnillo. And as you can see there, it gave you an idea of what 32 meters wide means. What that means from a mining point of view is you use a different extraction. It means your mining costs go down at that point and your economics go up. So this was very good news to us. The other thing that happened too is we discovered the Anticipada vein as well. And that vein alone at this area, we're assuming or projecting that it's at 3 million tons itself, and it's only 100 meters away. So we have this very robust project that we're working on, and we have this additional vein structure that we have found. Excuse me. So just in a nutshell, what we have here is again just the Anticipada vein. As you can see, it's grown from being cut off here. It continues to grow down this way, as well as the deposit, and the tonnage is considerable as well. This gives you the metal grade distribution. In these type of veins, you have high silver at the top, and as you go down, the silver wanes and the base metals start coming in. And that's indicative of the red, which is of course thick, and you can see here silver. Gold is kind of a little curious on this deposit, because it's supposed to be just along the top, but it almost seems to be pervasive throughout the deposit. And at the bottom you have your lead and zinc. What is also new to us here is that copper has come into the system for the first time in this area, which is very unusual, and it's leading us to believe some other things that I'll get to. Of course, Eric's probably going to cut me off pretty soon. We'll skip this and go to that. So what we actually have going forward is we're getting towards the area. We're not quite there yet, but we're looking at potentially 2 projects. We have the first project here, which is of course the increase in throughput, which I discussed earlier, and that's project 1 on the top, and we're going forward and going to be accessing that and bringing that into production on the beginning of 2019. What's also happening when you have those larger tonnages, you have more tons per vertical meter, so you're more efficient on your mining techniques, and you have another project down below that is getting very close to the same tonnage, and of course increasing the overall size and value of the company. So what do we have going forward? The Bonanza zone going into production by 2019, drilling continuing on the project with a 20,000 meter drilling program, a technical report coming out with an updated resource in the end of the summer, excuse me. So this just gives you an idea of who we're covered by, and our share price recently has been down with the JDXJ fiasco. We are very well represented by institutional shareholding. We have over 80% that way, and as you can see, pretty significant people on that list. We've got a great board, and of course, we've done all this on 80 million shares. We've raised over $240 million over the time, but with only 80 million shares. So we're in a very good position. Our market cap is rather large for 8 people in a company, which gives you about $170 million market cap per employee, which is a metric we like to use. And it gives you an idea of what MAG is about. Thank you very much.